Good morning, traders. Welcome to this FXDD video on Bitcoin and gold for the next couple of days. Before we do that, though, be aware of this risk disclaimer explaining the fact that trading for exchange and global financial markets is considered high risk and may not be suitable for everyone. Please seek the advice of an independent financial advisor for more information on that. And this video is for informational and educational purposes only. If you want to join more live webinars with Ned and myself, check out these links for live trading and educational webinars. And of course, if you don't want to miss any of the videos, including these analysis, then subscribe to the FXDD YouTube channel, because there, of course, we upload all of our videos and webinars. All right, gold making an upside here and then correction. So a week ago, we were looking at this and potential wave 3 here. And I said a move up to the minus 272 target is likely. That's what happened. We had a break, a bounce, and a break, and a move up to the minus 272 target of 1530. That was a bouncing spot, a strong bouncing spot, probably created by news, but nonetheless, price reverting back pretty strong, and then there was a slow crawl to the upside. So for the moment, after price hit the minus 272 target, it looks like price is making an ABC correction to me after a flag breakout basically since last week. So if we now move the fib from here to here, because this could be a completed 5 waves within a bigger wave 3, 1, 2, 3, 4, 5. This was typical wave 4 flag pattern and a short wave 5. And that could have completed maybe some type of wave 3. For instance, this could have been wave 1, 2. This is wave 3 perhaps. In any case, there's a fair chance that price responded to the 38.2 fib here. And that could be a bouncing spot for trend continuation. But whether the trend will continue right away, I'm not sure. I think price could go deeper maybe to the S1 here, the weekly S1. Maybe even build a triangle pattern at this moment, with this being an A, B, C, D, E. And if it does that, it looks good for a breakout to the upside. Or maybe even a more impulsive correction down to the 50 fib and the 144 EMA. If that happens, I'm looking for basically bullish candlestick patterns at that support zone to confirm a bullish bounce and reversal. If price, however, if price makes the downside here and retests this bottom or the 50 fib or the S1, another way of looking at it would be a break above the 21 EMA. So the 21 EMA will go down like that as price is retracing, and then if it breaks above it, that could be a breakout. But maybe more interesting is not the first break, if the 21 EMA slants down like that, but the second, the break, and then the pullback, and then the next break or the continuation is the most interesting. Whether this is a B, C, D, E, or whether it's just an A, B, C, and this is wave 1, 2, in both cases, a pullback after the breakout before continuing does seem likely to me, and that's called confluence. So from that point of view, waiting for that confirmation and continuation here may be the better approach in my view. And then an uptrend is likely to continue, and I think could bring it up to 1570, minus 272 target, maybe even further than that, maybe up to 1600, almost 20, as you see, the minus 61.8 target. All in all, when we look at the weekly charts, the weekly candles remain bullish, remain higher highs and higher lows, strong momentum on that time frame, and also price pulling away from the 21 EMA. This is candle number 11, so that's strong momentum at this moment. 21 EMA has a very strong angle. It's being pulled away from the 144, and there's a growing space between the 21 and 144 on the weekly and the daily as well. So huge momentum at this moment. And if we look at the monthly chart, you can see that price is really breaking away with the trend aligned. 21 is above the 144, price is above the 21. After a strong correction, price is now fully back in uptrend, momentum, correction, and momentum at this moment. So I think more upside is likely. Let's put a fib from here to here. And 1580 seems to be at the very minimum that I would expect. 1586. So after that, it could all the way even go up to the 1733 zone there, which is the 78.6 fib. And if we put a fib from here to here on this potential wave 1, and this is a potential wave, well, it's either 1 or A, and this is 3 or C. So 1578, after that 1700 seems to be the targets, I think, the major targets here on the higher time frames for the moment. All right, at this moment though, I think this is just a small pause. I think that if the breakout and continuation happens this week, it's ready for an immediate follow through to the upside. If it doesn't happen this week, then there could be a little bit bigger correction perhaps, and we might see something like this first. But for the moment, I think, this correction will probably not be that lengthy, and I think that there could be maybe a triangle the next days, but eventually a breakout later this week, I think, is likely to take price to that minus 272 target, first of all at 1570, if I remember correctly, and take it above the weekly pivot point R1, R2, and continue up to 1570 for the moment. All right, and then there's Bitcoin. Well, Bitcoin had a bearish week last week, and that was after 2, 4, 6, 7th candle. That does not look good for the bulls for the moment, and I think a bigger correction is likely to take place, and I think that price could go sideways for the moment and correct. So this could be wave A, this could be B, C. We do have 2 bullish candles with wicks. That could indicate the end of wave C and the start of wave D. That wave D should not break above this top, otherwise it's not a wave D anymore. Otherwise it could be a bullish breakout. So as long as it stays below 12,259, it could be a wave D, and then down again for wave E. But this could take even longer than that, because the next weeks could be choppy. So from that point of view, maybe this is not even the wave B. It could be that this is wave A. This is all part of a wave B, then down for C, then up for D. It could expand, because if it is what I think it is, then next couple of weeks there could be a correction due to the time pattern that I see on the weekly chart, which is 7th candle failing to break this top. Now, obviously that's just a rule of thumb. So could it break earlier? Sure. My expectation is end of September, beginning of October, but that's just a rule of thumb. So if it does break above this top at 13,753, that would invalidate my analysis. Okay. And then of course, an immediate breakout is taking place. Or if it breaks through this bottom, then of course, something else is taking place. Maybe it will retest the 61.8 fib, maybe the 78.6 fib. I personally think the 61.8 fib is already a likely bouncing spot. Maybe even the 50 fib, because the 50 fib was missed twice actually here. Although there was a double bottom, the price didn't actually hit that 50 fib. So from that point of view, if price does move lower, there are still some bouncing spots along the way for a move up back to retest these highs for the moment. Ultimately, though, at this point, I think that I'm not expecting much price movement. I'm expecting price to move up like that and down and just go sideways ultimately between about 9.5 and 12,000 and a quarter for the moment. But the real key levels are the top 13,3/4, 13,750, and these support fibs, because ultimately it is a strong uptrend. It is super strong momentum, and this is correction, so continuation higher is likely. For the moment, I don't expect a continuation to happen soon. I do think that either a triangle will take place, or if not a triangle, then price will reject at this 11,000 level probably, and maybe even make a lower low, and then make a flag, and then make maybe another lower low, and then finally start making a rebound, a correction, then maybe a rebound, and before you know it, you're already in the second part of September. And that could happen. It could correct lower and deeper to the 7,500 level, for instance, before a continuation of the trend is likely. For the moment, I do think that the trend is likely to continue. The 21 EMA is a very steep angle. There's a lot of space between the 21 and 144 EMA. There are a lot of candles above the 21 EMA. So from that point of view, any bearish correction, I think, is just a pullback for one more move up to the minus 272 target or minus 61.8 target from 7.5 up to these levels. So from my point of view, could be kind of a discounted level within this trend. All right, traders, that wraps it up. Of course, here are the links once again for more videos and webinars from Nenad and myself. Wish you all good trading and see you soon. Cheers.